For years, Argentines have been locked in an eternal tango with boom and bust cycles, leaving home loans to gather dust like antiques in a forgotten attic. Mortgage systems were essentially the imaginary friend of the financial market, promised but never arrived. Fast forward to 2025, there's chatter about banks dishing out a staggering $3 billion in mortgages, a jump of roughly 260% from the previous year. Yes, you read that correctly. After decades of mistrust and repetitive economic heartbreak, the mortgage market has staged a comeback worthy of a Broadway musical revival, with slightly fewer jazz hands. But let's not pop the champagne just yet. While the headlines sing paeans to President Javier Milei's so-called economic nursing skills, a closer look reveals that us mere mortals, and even Wall Street hotshots, must remain cautiously optimistic. How did we get here? A mix of lower inflation, a dramatic rate cut, from 133% down to 29%, and banks' desperate need to diversify from the reliable, yet soul-sucking, refuge of government debt have all coalesced into a perfect storm of credit reintroduction. Imagine being caught in a storm of triple-digit inflation, so wild that monthly prices would make a roller coaster seem like a gentle merry-go-round. In Argentina's recent past, inflation soared so high it could have made a rocket look like a lawn dart, climbing from a deathly 25% per month to a much more palatable 2%. With such a dramatic slowdown, real wages have finally begun to catch up with the cost of living. Economist Juan Pablo Roger, for instance, was resigned to forever renting until the banks started whispering sweet mortgage nothings again. The math is simple: lower inflation means lower interest rates on loans, making it feasible, if not downright attractive, for bankers, with all their conservative instincts, to lend money once more. Data from local consultancies, like Imperia and Adiba, back up this narrative. Private sector loans soared by a nominal 22 trillion pesos, that's around $20.8 billion when adjusted for inflation, in 2024, the most significant leap the country's banking records have registered since the early 1990s. It's as if the banks woke up one morning, cleared off their desks of old government bonds, and said, let's actually help people build houses again. Yet, while this rise is cause for a few celebratory toasts, it's important to remember that the mortgage loans in question come with a twist. They're issued in UVAs, units designed to ride the wave of inflation like a surfer on a tsunami. One UVA currently equates to about 1,356 pesos, adjusted daily by the central bank. This indexation is the bank's answer to the perennial question: how can we lend responsibly in a country where your pesos might devalue faster than you can say, sovereign default? It's a clever solution, albeit one that still leaves borrowers sweating over potential adjustments in their monthly payments. Enter President Milei, the man whose economic policies have reshaped Argentine economic discourse in ways that would leave even the most seasoned policy wonk scratching their head. On one hand, advisors are quick to credit him for squashing the runaway inflation beast and slashing borrowing costs. On the other, skeptics remind us of the country's recurring dance with economic collapse. Every few years, Argentina seems to host its own dramatic reenactment of fiscal and monetary crises. Milei's strategy, often described as maintaining the peso's overvalued status while retaining currency controls, strikes many as an uneasy middle ground. It's the kind of policy where you might feel like you're on a tightrope strung between fiscal discipline and risky speculation. The banks, forced to abandon lucrative but volatile government debt, now have no choice but to explore consumer lending, a market that, at present, appears buoyed by a newfound trust in the government's short-term direction. Consider this: in Buenos Aires, mortgage-backed home sales tripled in 2024, reaching around 5,000 sales compared to the previous year. This dramatic uptick is emblematic of the country's economic mood swing. Sure, the optimism is palpable: buying a house is suddenly in, and the average buyer is seizing the opportunity to lock in what might be the best deal in years. But there's always that tiny, nagging doubt: what if inflation picks up again, or the government's deflationary magic proves to be just another fleeting illusion? Recent examples in emerging markets reinforced that caution. Take Turkey, for example, where similar policies led to short-lived periods of stability, only to be followed by a harsh reencounter with inflation. Is Argentina now marching in step with history, or are we witnessing the dawn of a stabilized, modern mortgage market? While banks have rejoined the love affair with mortgage lending, there remains a sizable caveat. Only those with proven income from formal employment can access these newfound credit streams. And in Argentina, a country where nearly half of the workforce is employed informally, this means a significant portion of potential home buyers are, quite literally, left out in the economic cold. Imagine being an enterprising Argentine dreaming of owning property but finding out that your local mattress bank, the age-old tradition of stashing dollars under your bed, is the only asset you've got. For many, real estate remains the safe haven, a tangible asset with positive long-term returns in a market otherwise riddled with volatility. But with half the population ineligible for credit, the revival of mortgages might end up being a privilege for the few rather than a solution for many. Furthermore, we must ponder the long-term effects of these policies. Banks might be eager now, but what happens if the government strategy to keep inflation in check begins to falter? Economic analyst Federico González Rucco warns that in times of uncertainty, both financial institutions and consumers lose the luxury of long-term planning. If inflation surges anew, the carefully calculated mortgages, in UVAs no less, could quickly become unaffordable, turning today's boon into tomorrow's burden. Recent trends in other Latin American economies suggest that sustainability remains a precarious promise. Brazil, after its own bouts of inflation control, saw mortgage defaults spike when interest rates eventually climbed. As such, there is a stark possibility that Argentina's current enthusiasm may be short-lived if the underlying structural issues aren't addressed comprehensively. For many Argentines, this revival of mortgage lending is not merely an economic event, it is a cultural milestone. After all, homeownership in Argentina has long been associated with stability and long-term security. With over a third of Buenos Aires households renting and the majority of property transactions historically conducted in cash, or, as locals affectionately refer to it, dollarized assets, the reintroduction of credit into the market symbolizes a return to a form of economic normality that many thought was lost to the annals of crisis. Take the case of Augusto Roca, a digital marketer who recently snapped up a 70-square-meter apartment in Collegiales for $143,500. Roca, and many like him, are betting on the government's ability to keep inflation at bay, believing that these favorable conditions will persist long enough to secure a lasting financial advantage. With monthly repayments hovering around 756 pesos, with nearly 78% of that being interest, Roca's situation highlights a broader truth: when credit is available in an environment of subdued inflation and stable rates, even a high-interest component can be manageable. Yet, the specter of risk never fully dissipates. While optimistic voices proclaim that these loans wouldn't exist without the government's magic touch on inflation, critics remain cautious. They argue that if inflation's slippery grip reasserts itself, even the best-laid plans could crumble, leaving both borrowers and banks grappling with skyrocketing costs and negative equity situations. Drawing parallels from previous economic upheavals, one can't help but wonder if today's profitability might be tomorrow's regret. What does all this mean for individuals, banks, and policymakers? First, the resurrection of mortgages in Argentina is a double-edged sword. On one edge, it offers a reprieve from the era of cash-only transactions and an opportunity for citizens to invest in their futures, provided they can navigate the inherent risks of inflation and long-term debt. On the other edge, it exposes the deeper, unresolved issues of labor informality, policy inconsistency, and the perennial threat of macroeconomic instability. For policymakers, the challenge is clear: maintain a delicate balance between short-term fixes and long-term stability. President Milei's current strategy, successful as it appears now, must eventually be complemented with reforms that address Argentina's structural issues, such as enhancing formal employment rates and dismantling those burdensome currency controls that have long been the bane of sustainable growth. Failing to do so could see the mortgage revival become nothing more than a short-term spectacle, a brief intermission before the next economic downturn. Recent studies by international institutions, including the International Monetary Fund, IMF, emphasize that structural reforms in labor markets and fiscal policies are essential to underpin any lasting recovery. In countries where such reforms were implemented, think Chile in the 1990s or even South Korea's post-IMF reforms in the early 2000s, the results have been transformative. Argentina would do well to adopt similar measures if it genuinely intends to transform its credit market and cement its economic future. In a nation where every other decade seems to come with a side of sovereign default, the renewed optimism concerning home loans is both encouraging and ironically precarious. The story is a curious mix of triumph and caution, of marveling at the apparent resurrection of a once dead lending market, while simultaneously acknowledging the historical forces that have repeatedly undermined Argentina's economic aspirations. As Argentines once again take the plunge into the world of credit, the lesson is as old as time: economic booms are often followed by busts, and today's success can be tomorrow's cautionary tale. Homeowners like Juan Pablo Roger and Augusto Roca are betting on stability, relying on government intervention to hold back the tide of inflation. Meanwhile, skeptics peer into the rearview mirror of Argentina's economic history, wondering if this too shall pass, and if it does, whether it will leave behind lessons learned or scars unhealed. So, while the banks cheer and the government boasts about its inflation control feats, we must remember that beneath the smiling face of optimism lies the buried skeleton of past mismanagement. The revival of the mortgage market is a moment of triumph, but also a vivid reminder that sustainable progress requires more than just short-term magic tricks. It demands a comprehensive, structural transformation that tackles the roots of economic volatility. In the grand circus of Argentine economics, today's mortgage revival might be the act that enthralls us all. But if history has taught us anything, it's that the tightrope walk of policy reforms is perilous, and the applause of the present might soon be drowned out by the boos of the future. So, let's raise a glass to the newfound optimism, but keep our eyes firmly on the balance sheet. After all, in economics and in life, nothing is ever as simple as it seems. Dear viewers and industry professionals alike, the current mortgage boom in Argentina is a paradoxical mix of advancement and caution. It symbolizes a short-term leap toward a revived housing market but also underscores the deep-seated vulnerabilities that continue to haunt the country's economic policies. As we cheer for the temporary return of mortgages, let us also remember the old adage, history may not repeat itself, but it sure does rhyme. Only time will tell whether this scheme turns into a long-term solution or a prelude to another dramatic downturn. Keep your calculators handy, your skepticism sharp, and your sense of humor intact, because in Argentina, economic optimism is as fleeting as inflation has been historically volatile. And that, my friends, is the real story behind the numbers.